All right, folks, here we are on Trading Nut. We've got Nathan Jester in the house with his business partner Charlie this time. So welcome both to the Trading Nut YouTube channel again. And Charlie, welcome to you.
Hey, Cam. Thanks for having us. I appreciate it.
Cool. So we did shoot an amazing podcast. Go and check it out with Nathan below the video. You got to go and check this one out, guys. But today we're going to walk through a trade using smart money concept with Nathan, and then we're going to jump into Wyckoff/supply and demand with Charlie. So yeah, we're going to start off with you, Nathan. Do you want to share your screen and we can get into it?
Absolutely. Perfect.
Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
I'm going to first start off talking about an NZD CAD trade that we took with our VIP members a few years ago. This was actually in early of 2020 when Aerial FX first started. So our main strategy is smart money concepts, so institutionally based trading. The biggest thing you want to fully understand about any type of strategy that you're using is first and foremost structure. So I want to start off by highlighting the overall structure and trend of what's going on in NZD CAD. So, you got to keep it sweet and simple, right? What are we doing? We're selling off lower low, lower high, lower low, lower high. We're in a bearish market. I had bar replay here and I cut off just so I don't have to keep scrolling back. But we're in a bearish market. Now, the entire trade that I'm going to be discussing, or actually multiple trades that I'm going to be discussing, are all buys. So it's okay if you would like to buy in a downtrend if you have all the confluences. I don't recommend it because obviously trading with structure is so very crucial to being a lot more profitable. But in terms of, if you have all of your rules and confluences in conjunction with one another, it is very okay to go counter trend. So I'm going to be showing you a couple counter trend trades within NZD CAD. So obviously the whole structure is bearish, but in here we can see that we have liquidity. What's liquidity? Equal lows, retail trader stop losses. Okay, so equal lows, retail trader stop losses, price sold off very, very quickly to take all of that liquidity inducement. All right, so the big banks, institutions sold off, grabbed all of those orders. And if we actually go to a higher time frame, we can see this from a higher time frame perspective. Look at all of this. Look at these equal lows. This is all the way back from 2015. Liquidity, so much liquidity. We went very, very quickly to take that right back to the upside. Okay, so this is a liquidity purge inducement to then potentially have some sort of overall pullback to go long. So with that being said, going back down to the 4-hour time frame, we can see here the very quick reaction. This took all of 1 day, 24 hours, 6 candles to the 4-hour time frame. And this was about 300 pips. This huge move was 500 pips. 800 pip move in a span of 1 day is quite large when you're looking at volume. All right, then what did we do? We pulled back and we started to make higher highs and higher lows. So now I'm going to be getting into the trades that we took with the VIP members. Understanding the lower time frame, higher time frame structure is very, very important. Higher time frame structure, we're overall bearish. Lower time frame, we are now bullish. So here's the thing. Having an entry is just as important as setting your take profits. If you don't have a take profit, if you don't understand where you're targeting, the entry doesn't even really matter. So first and foremost, let's figure out where we're targeting. Where could price go after these higher high, higher low marks? Well, I'm going to be looking at this region of price here, this supply level. Okay, I'm just going to move this all the way over. So these will be our target ranges. If price can pull back up into this level, then we will look for overall shorts in the market because this is a key supply level. Obviously, we're still in bearish territory here until we hit this mark. Okay, so now going down to a lower time frame. Right in here, we have not come up into that supply level. We have actually created more liquidity. High here, a high here, and a high here. What's sitting above these highs? Liquidity. They will be taking that liquidity before potentially going short again. All right, so we can see the structure in the market, higher high, higher low, higher high. What I teach my members is every time a higher high is formed in the market, where should your eyes go? it should go at the last point of demand or supply in whichever direction you're trading. In this case, we're trading up. So we should look at the last point of demand in this trading region. Okay, so I'm going to highlight this with this horizontal line. We have a level of an imbalance. Imbalance means inefficiency in the market. Price moved up so fast without offering any sort of selling region within this price region here. No selling orders were allowed right in here. Okay, so price tends to fill in those inefficiencies. We can highlight this right there. And guess where price came down into? Perfectly to fill that inefficiency into that demand level. Okay, higher high, higher low, higher high, higher low. Now we're looking for a higher high. All right, so that inefficiency demand level has been met. Now, if you didn't want to take this trade here, that's okay. There are other confirmations that we look for if you want more of a conviction that this will be going long. Well, this happened on Friday. We had to wait till Sunday market open to get back into this. We filled the gap to confirm the trade is going long in this direction, right? After the play here on this inefficiency in the demand zone, we had the reaction back to the upside. How to confirm that is simply to look at the counter trend structure. Counter trend meaning the lower lows and lower highs within this overall bearish leg, right? So our last lower high is right here. Had the reaction, higher high. Where should our eyes go next? Simple smart money play. Took out the high, took out the liquidity, pull back. We should be going right here. Our nearest point of demand. Okay, nearest point of demand. You could have caught an entry off that. Again, if you didn't know that this was going to be a reactive level, let's just say that you wanted to come down further, maybe fill in this inefficiency here. That is okay. You can wait for price to do that. However, if you wanted to wait, you could just look at the counter trend structure in here. Okay, so let's go down to the 30-minute time frame and check it out. Counter trend play. Lower lows, lower highs. Okay, we finally closed above this previous lower high. Closed above it, we have now made a higher high. The structure has shifted. Now we can confirm that this reaction from this demand zone has proven to be correct, and now we are to continue with upside momentum. All right, so you could have placed your trade anywhere in here. Okay, I would have gone right in here. This last sell to buy candle. Sell to buy, our last selling volume prior to the buying momentum up in here. Pull back into that level. You can continue all the way up and target these higher time frame levels, most likely around 8,580, which is the start of that supply zone in the higher time frame. Now, we have finally made a higher high in the market. Okay, we have reacted from our higher time frame demand zone. All right. We have confirmed the longs with the counter trend break of structure, not only here, but down in here when we broke that counter trend. Now the higher high has been made. Okay, so now where do we look next for a potential opportunity? Well, we're going to be looking at our next point of demand right in here. See, if you're in an uptrend, you want to keep looking at all these demand levels. Demand's going to be your friend in an uptrend. Keep looking at the last point of demand, which is right in here. Take this all the way over, and guess what you get? A perfect reaction. A sell to buy into that. Liquidity has been induced. We have been pulling back, trickling down. We have these equal lows right in here. Equal lows, that's liquidity, retail trader stop losses. We're going to be taking that liquidity. Guess what? Sell to buy. We broke structure. Breaking structure for me is either making equal highs or making a higher high. So we came down exactly into the level we took a buy off originally. We're just following structure. That's it. Following the demand zones within structure, waiting for confirmations, looking at where imbalance is in the market in your proper demand zones, you're going to be very successful in your trading. So look at this. Very strong bullish momentum. Had no opportunity, no selling volume in here. We have to go fill that inefficiency. So we come down, we fill that inefficiency back into that demand zone, perfect reaction, sell to buy. Most manipulation, and I say manipulation because who is the biggest driver in the market? It's not you, it's not me, it's the big banks, the institutions who are moving price. All right. So once they see all of these orders, let's just say there is $100 million worth of stop losses right here, and it's only going to cost them $50 million to push price down this far to take that liquidity. Well, they're going to pocket 50 million, and that's going to be, positive for them. So they're definitely going to be doing that. It's all about order flow and looking where retail traders are looking to get in. Okay, this is why it's smart money. Smart money being these institutions and banks, they leave clues behind in the market to tell, okay, where are they going to go next? In this case, very strong push to the downside, enticing the retail traders to go short. Guess what? The closure below retail trader support, the retail trader support is just, bound to be taken and then back up to the upside. Breaking it, people try to enter right back to the upside, retail traders lose. Okay. Now us as smart money traders can recognize that the liquidity has been taken, sell to buy back to the upside. Now we got to be looking for where to enter. Now, big banks and institutions, they're going to be trying to mitigate their orders. Mitigating simply means to make less severe, to try to get out of their selling orders that are in here. Because they place sells, they got to get out of them. When price goes long, they're going to be in drawdown. They need to get out. So where do they get out? Well, it's where they place their orders to begin with. That's why we call them sell to buy candles, or buy to sell, whichever direction it's going. So in this case, we perfectly tapped into this demand, mitigated the sell orders that were in here before the overall trend continued. Same thing right here. So guess what we're going to be looking to do? Pull back into this level here, the sell to buy candle, and I'm going to make this 8,400 psychological key level in the market. Okay, we never got that pullback down into here. I was really hoping we would get it, but we didn't. We had to wait. We had to be patient. And again, look at this: higher high, overall higher low, higher high in the market. Now where do our eyes go? Back down to the nearest demand zone, the first demand zone where we originally took liquidity. And you really want to be, when you're buying, you want to be buying at discounted prices. You don't want to be buying anywhere above the 50% retracement. I use Fibonacci retracement. I really do like it because it pertains to a lot of things, even in nature. It's just a very nice way of looking at overall retracements in the market. You want to be buying at discounted regions of price, never above the 50%. Why would you want to get in at a premium? You want to pay discount for things. So waiting until price got back down into discount, that sell to buy candle, perfectly mitigated, right? Guess what happened next? The lower lows, lower highs, counter trend. Let's just say that you didn't know that we were going to react off this. Even though we do know, let's just say we didn't, right? We'll wait for the counter trend break of structure. Counter trend has been broken. Our lower low, our lower high, our lower low. We broke that lower high, created a higher high. Now we're simply waiting for the retracement. Now you may ask, okay, where are we going to get in from here next? All right, so we want to zoom into this level. Now to get a simple entry, you could just place your limit to retest this prior sell to buy, because this is a region of demand, okay, where we broke structure after mitigating our orders back here. So we have an entry here. Now we could easily just get in here after the higher high has been formed, place our entry at 8,450 psychological level, or we could look for a more smart money play. Now, this is where we want to be looking. Where is our nearest demand? Our nearest demand is right here and right here. These are the last selling orders in the market before the big move occurs. So simply put, we can just put our limit order right there, got a perfect entry, little to no drawdown. Again, inefficient pricing right in here. Inefficient pricing, straight buying volume, no opportunities to sell, which creates the inefficiency. This wick right here, which is the start of the demand, fills that inefficiency. That's exactly why we started to stop right in here and accumulate before going long again. So now let's just say you have an entry right here. Where could you get in? Well, you see the reaction from this level. Where's the counter trend move? The counter trend move is right here. Lower low, lower high, lower low, lower high, right? So in this case, I wouldn't have taken another trade here because the counter trend hasn't been broken yet. The counter trend has finally been broken right here. You probably could have caught something in there, but I didn't find anything whatsoever. So there was no trade off the counter trend play. However, once that higher high has been formed, we then look at a new point in the market right here. And I'm just going to get rid of all of this nonsense. Here we go. So again, higher high has been formed. Where do we look next? Our nearest demand level. So after we reacted from here, this is our nearest demand level. And you could even just place your order right at the top, right here, 8,450. So when it came down, you got a nice entry. You had a little bit of drawdown, but again, the stops go below the demand zone. And in this case, it wouldn't have hit it if you placed your stops below here. So now we're going to continue. Okay, let's just say that we placed our order here and we made a higher high. Okay, so now where should we be looking next? Higher high, higher low, higher high, higher low, higher high. We should be looking down in here for demand. Okay, so even though these are nice demand zones and you may not feel comfortable just taking it off the structure, which really is a good indication, you know, you see any sort of reaction from these levels that you're going long, you can always look at the counter trend breaks. Here, there really wasn't a counter trend trade here. There's no counter trend structure. That's very clear. It's just a series of mini highs, and lower lows and lower highs. So nothing I could have played off of here probably to get in. However, this level here provided a great area of demand. A great area of demand. We can stretch this all the way out. All the way out. Okay. We would have easily placed our order right in here. Now we're in discounted prices. Okay. We can pull our Fibonacci retracement from here to here. From the low to the high, we're back in discounted regions of price. Our demand zone. And then look at this. A lot of the time, and this is very key when determining if a demand zone or a supply zone, in this case demand, if it's going to hold properly. It will hold properly most of the time if, one, it's with trend, two, you have a reaction prior, so we have reactions in here based off of other demand levels, and three, liquidity starts to form prior to the demand zone being hit. Liquidity, look at these equal lows. Low here, equal lows. This is retail trader support. All of this liquidity here will be taken in a fast motion too. And look, exactly that's what we had. Sell, very strong selling volume, taking all the liquidity from the retail traders, moving back up very, very sharply. Strong reaction back to the upside. The counter trend has been shifted and taken. And guess what? We had the reaction from the demand zone. What did we also have? Well, we also had our inefficiency within the demand zone right here. You can see this wick, this wick and this wick, there's just inefficient pricing within here. We filled that to the exact T. This is where you'd find precision in the markets, okay? If you guys are struggling to find proper entries, if you guys are having 50, 100, 150 pip stop losses, it's completely unnecessary because all you have to do is find where institutions are looking to place their new orders, and you will get precise entries. So in this case, just following our rules here. Where is structure? Structure is bullish. Where do we have demand? Okay, we're bullish, so we found demand here. Reaction, found demand here. Liquidity has been taken. All of that liquidity. Sell into it. Okay, liquidity has been taken. The inefficiency within the demand zone, oh, it's just beautiful. Perfect reaction, low drawdown. And all of this is just a singular pullback within another leg to the upside. So the counter trend is right here. You have your lower lows, your lower highs, your lower low. So your lower high right there. We have broken that and created a higher high. Okay, now I'm going to go to the 1 hour time frame. Look at this. See, it's just repetitive. It's a repetitive thing that we do. Higher high has been formed after the liquidity has been purged. Strong sell to entice sellers into the market, in addition to taking retail trader stop losses. An immediate buy back up. Retail traders who have sold in here lost, get their stop loss because they place it right above this high now. Demand zone has been filled. Inefficiency has been filled. And now we wait for the retracement back into this last sell to buy here. We have to mitigate the orders. That's just what's going to happen. Banks have to get out of their sell positions. So they come down, they mitigate them, and then we can continue up. So in this case, we actually did fall back to the downside. This was a major news event that occurred. And in that case, you know, after, and this is what we teach, after the previous high, you want to put multiple take profits to take you out of the market, you know, every so often, so you're not in a huge winning position. And then when if something like this happens, you end up not only going break even, you could even lose. We want to mitigate that entirely. And we usually close part of a position at the previous high. And that's exactly what we did, taking partials within this region, moving stop to break even. If it comes down, oh well. And in this case, it did, got hit out. At least we didn't get hit with our stop loss, which we would have if we didn't move stop to break even. So we can see here, if we just scroll all the way back, potentially we would have had, if you took all of these trades, and our VIP members took a couple of them, 1, 2, 3, 4, 5, 6, potentially 7 here. Probably wasn't the best trade. 7, and then our overall one, 8, and then you could have had 9. So 9 trades. I didn't even calculate the risk reward. Probably would have been insane. But just following your rules, and smart money plays out time and time again. The markets are fractal. Fractal meaning everything, every single concept within smart money trading happens on every single time frame. We're able to hit all this stuff every single day on any time frame. We stick to our rules, and we're going to be successful overall.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. Great breakdown of smart money concept and how to trade it. I've not seen it taught like that before, so thank you for sharing, Nathan. Now, what I think we're going to do is wrap this one up, and we'll get you back on, Charlie, for another video and go through your trades as well using Wyckoff and supply and demand. So, to wrap this one up, Nathan, what's the best way for the guys to get hold of you?
Best way to get a hold of us is our IG or our Telegram. We actually are setting up a Discord. You can actually follow our IG at Ariel__FX. It's double underscore. Or you can give us a message, send us a message on Telegram at ArielFX Trading, and send us a message, and we can direct you guys to our Discord as well. We have a full community of people talking all the time, so do not miss out. This is a great opportunity.
Brilliant. Guys, do remember we did do a podcast. Go and check it out. Link under the video. We've got Charlie coming up next, so stay tuned. You'll see that video dropping soon. And look, if you like what you see on the charts there, you want to automate some of it, I've got my Robot Builders Club where I teach you how to automate semi or fully automated strategies without doing any coding at all. And if you're wanting to get your trading mindset on point, check out the Genius Trader all over there on tradingnut.com. Guys, hit subscribe, hit like, click on that notifications bell, click all, and we'll see you in the next video.